I'm the Credit Savage. Welcome to my channel. Um, Back at it again. Just trying to do a little prepping for the coming week. I do know that we have kind of a busy week coming up. There's been some really good last few weeks where our stocks have been kind of flying. And at this point, it's just about getting ready for what's coming up. And, we're just trying to basically position ourselves um, in a way that we can basically capitalize on the coming up trading week, right? So we're trying to make as much money as possible, as quickly as possible, and as conservatively as possible when it comes to our approach, right? That being said, welcome. I guess we're trying to get ready for this, second week of December when it comes to our trading. I know that a lot of our stocks, are kind of flying, and I expect a little more of that to take place this coming up week. Um, as far as tax loss harvesting, I do know that there's been, pockets that have kind of started to dump, you know, um, the trash per se on their portfolios, but we're probably going to have some more of that happening in different sections. You know, I don't think it all happens at the same time. Not all the sections say we're gonna do tax loss harvesting today, and it's a complete sell off. It's happened before, I think in 2020 or 2019, and then I think there was a lot of sections that dumped their non-performing stock and then took their losses to write off against um, their high performing stock. So probably prepare for some of that to happen this week, but I wouldn't prep in a way where I'm expecting like a huge dump, right? So keep doing what we do. It's my motto. You keep doing what you're doing. If it's working, if it's not broken, don't fix it, and then just look for opportunities, right? We want to look for opportunities, and we want to take advantage of um, as much as much of the upside as possible while also capitalizing on the downside. So if we have a day or two where we see a lot of stock that is being sold off, that's where you come in and then you do your cash secure puts, right? And you bring in some premium, making money on nothing, and perhaps buying the stock that you want to buy at a lower price, which is great. All right, let's see who we got here. Nick Carpenter. What's up, Nick Carpenter? Nice to see you. Mason Michelin Casio. What's up, buddy? How you doing, man? Welcome to my channel. Um, so yeah, we're experiencing a nice little uptick in the markets. We have an administration that's coming in that is a lot that's very favorable when it comes to Wall Street, right? Because of the deregulations that happen. We're not trying to get political here. I've said it. Um, I've said it before, and I'll say it again. It doesn't matter who is in office. The point of the stock market is to make money. It doesn't care whether you're Republican, Democrat, whether you are a liberal or a conservative. It just cares that your money is good, that it clears, and that you leave it there, right? And then you take advantage of that, making a lot of money. That's basically the gist of it. So, anyhow, we're going to look at Unity at this point, right? Um, that's one of my favorite stocks because I've been trading Unity for a couple of years now, and I was trading it when it was in the 14 $13 area. I was pounding the table and I was telling people, this is this is definitely a stock that you want to hold long term. My number one um, my number one rule when it comes to stock market uh, jumping in and kind of starting out is don't trade any money, don't spend any money, don't invest any money into any company that you're not willing to lose, right? Yes, we all want to make money. That's the bottom line. But, anything can happen, right? At some point, any bad news can happen. Wars happen. I mean, there's a lot of negativity out there. There's a lot of FUD, right? But um, that's the number one rule. That being said, this is why we look at the underlying stocks having some great fundamentals, right? And I don't trade in any company that I'm not willing to hold for at least 5 years. Welcome. If you're a new person on my channel, thank you. I appreciate it. Give me a thumbs up, and let's go and let's talk about Unity. It's a stock that have been trading as low as like $13, right? And at this point, it's 27.74, right? That's what we're looking at. Um, I look at Unity to cross that $30 threshold, and if you buy 100 shares, for $2,700, and you hold them, you're gonna be making $3,000 in a couple of weeks maybe. I just see it going and upticking, and nobody can for sure say this is exactly what's going to happen. If somebody tells you I know exactly what's going to happen to the stock market, they are BSing you because nobody knows, right? Doesn't matter if you're Warren Buffett or Jimmy Buffett. Nobody knows what the stock's going to do. The stock is its own device, and it just transfers wealth from people that are impatient to people that are patient. That's in Warren Buffett's book. That's one of the premier traders in the world. It has made billions and billions of dollars doing the same thing that I am doing and that I try to tell people about, which is you buy a stock for less than what it's trading at right now by doing cash secure puts and having it assigned to you. And if it doesn't get to that, then eventually, you will do another cash secure put and bring in more premium. Eventually, you'll get it. And eventually, it'll be one of those where you're going to be able to sell a covered call on it and make premium that way. And so you start basically, cutting down on your cost basis and making money on stock that you hold. So you're using it as collateral so that you can make a nice chunk of change. And you're basically going to be making money, and you're not working. Your money's actually working for you. So, yeah, I am holding for 5+ years, and that's just the bottom line. That when you're an investor, you don't want to be one of those people that are buying lottery tickets, right? Because at the end of the day, you're going to be just paying money to lose money, right? A majority of people that buy the lottery lose. It's just a numbers game. And so even if you win a $5 on a scratch off, you spend $25 to buy that scratch off, and you won $5, you still lost $20. So you lost 80% of your investment. That's basically the way you got to look at it, right? And you multiply that by 100, you're talking about several thousands of dollars that you'd be losing by taking the gambling approach. If you want to do it for fun, that's great, but why don't you take that approach into investing, right? Why don't you take $100, $200 every paycheck that you get, put it into the stock market, right? Open up an account and buy some companies that you're looking at. Do you go to Chipotle and buy Chipotle, every other week or every week? Buy some stock, right? You can buy Amazon. You use Amazon, buy Amazon stock. Do you wear Nikes? Buy some Nike stock. And that's just the way that you basically start building generational wealth. And that's the bottom line. That's why we're trading. We're basically in the stock market so that we can make money, right? And that's what you want to do. You want to make as much money as you can and being as conservative in your approach as you can. So let's see here. Who we got? We got Anon saying, "Why you bald?" I'm bald because I cut my hair. I don't like hair, man. I used to wrestle in college and in high school, and I have hair that once it starts getting to a certain length, it curls, and it used to get into my eyes, and it really bothered me during matches, man. And then especially when I was sweating, right? So then I shaved my head one time, and it was so free, felt so free, and I just loved that cool feeling in my head, and it's just it at this point I've gotten used to it. It's decades and decades that I just every week I just shave my head and I let it run, man. I like the way that I look. My wife likes the way that I look. She loves feeling my head when it's short. I don't know, it's something, it's her thing. I don't know. And I like it, so that's pretty much it. I save a lot of money when it comes to going to the barber because I live in the San Francisco Bay where they charge $30-$40 for a haircut. So you get a haircut every 2 weeks. You're talking about plus a tip. That's easily $100, a month that I'm saving. So you multiply that by 12 in a year. That's $1,200. That's $1,200 I could put into the stock market and then invest it and make it grow, right? So that's why I cut my hair short, and that's why I'm bald. I'm bald by choice. Although maybe in a few years I'll start losing hair in the back and here, but I don't really care because I like it. Could you explain the always be writing motto? All right, so always be writing. It's basically something that's just letting you know whether the stock market goes up or down. It doesn't really matter to you because if you're an investor, right? Um, you don't care whether the market goes up or down, right? If it goes down on a red day, especially on the red week, you want to go and look at companies that you're looking at, right? Let's say Amazon. Amazon's trading like at around 160, $170 right now, I think. Let's say there's a really bad week where Amazon comes in with numbers that goes down to 130 or 120, right? And that's a really bad, bad week. They lose 20-30% of their overall revenue, right? Or the price. Um, and so everyone is running for the hills and saying, "Oh my God, Amazon is a bad company." Well, no, it's not. Nothing has changed. The fundamentals are the same. And so what you do is, you say, you take $12,000. I mean, look. I know that not everyone has $12,000, and I'm sorry for those of you who feel insulted. I'm not trying to insult anyone here. I'm just saying that that's how you be talking cash secure puts, and I'm trying to explain the always be writing motto. So it's just an example. But you can do this for any stock. So there's stocks that are worth $2, right? So in order for you to buy, write a cash secure put would be $200 that you start with, right? So, but I'm just for explanation's sakes because everyone knows Amazon. I'm just putting this out there. So let's say Amazon is trading at $120, right? We trade in blocks of 100 when it comes to options, and so you will need $12,000 to write a cash secure put one contract. So basically, you say to the overall world of options, look, I have $12,000 here. Your broker, whether you use Webull, Charles Schwab, Robinhood, you go and you say, hey, look, here's $12,000. I'm guaranteeing that I'm going to buy this company for $120 a share, 3 weeks from now, right? And I want some premium for that, for my guarantee. So then you're going to ask for, I don't know, let's say $1,000, right? It could be 8%, it could be 6%, say $500, $600, right? So then you're telling someone in the world of options, right now, Amazon is having a bad week, so the chances are it could go low even more, but nobody knows, right? So you're basically saying, I feel very comfortable buying Amazon at $120 a share. But for you guaranteeing that and putting that money on escrow, what are you doing? You're basically saying, yes, here's the money, but I don't want it right now. I want it a couple of weeks from now because I think it's going to go down even more, right? But we don't know. Now, the stock stays in the $119 area, $120 area, right? And on that date, in a couple of weeks from now, let's say it's $119. Well, guess what happens? It's under 120. You said you're going to buy it at 120. They'll give you those 100 shares. Now you own the stock at an average of $120 a share, but you have 100 of them. So they'll take your $12,000 and you have your 100 shares. Nothing happened. You're great. That's a good investment. It's a great company. You believe in it. You're long term. But this is the thing. If it goes to 121, you keep the money. You keep the money from day one. That's your money. You could do whatever you want with it. You could have just shitted the money away and then nothing happens and then they'll give you back your $12,000. So what did you just do? You made 5%, 6% on money that you would have just not had in the bank. You have it on escrow, and that's always rewriting. In a red week, you decided to write a contract, and it panned out, right? So whether you got the money and kept the money, or they gave you your stock, it doesn't really matter because you're long. You keep the stock and you keep the premium, or you keep the money and you keep the premium. Either way, you're winning. And if they give you back your money because the cash secure puts didn't pan out because the stock is 121 and they're not going to give you $121 stock for 120, they'll be losing, right? They'll give you your money back. But then this is the thing. You can write again as soon as that happens. Now you could write for, the third week or the third Friday of the month, which is what I like because volatility and the premiums are the highest. You can then say, I'm going to buy it at $120 3 weeks from now. I want another $600. Boom. There you go. You just made another $600 on your $1,200. I mean, $12,000. What bank is going to give you that? No bank is going to give you that money, right? So that's always be writing. That's that mentality. Now, let's say for whatever reasons, the stock goes up, right? And then you have 100 shares of Amazon, and then the stock goes to 130, 135. Well, then you can sell $145 covered calls, and you make, I don't know, $600-700 because that's what you're going to ask for, so that you can sell in the future, right? At a price point where you would be okay losing that stock, losing it, and then you get to keep that premium. So if the stock goes above, they're going to take the stock away. They'll give you that $14,500, into your account, and you'll keep the premium. Then you can go in the market and sell another cash secure put when it's red, when the market tanks, right? And that's why I have that philosophy, and a lot of people that know me will tell you, always be writing. You're always going to be writing, no matter what, whether the stocks market's going up or down. You're basically writing contracts, and that's what we do as contract writers, right? We are option writers. That's what we do. We are always writing, and you're always bringing in premium, no matter what. So whether the stock market's great and having a great week, month, year, or it's not and having a really bad, year or week or month, it doesn't matter to us because we're making money. It's just one of those nuances, whether you're making money or a lot of money. It doesn't matter, right? And that's where that motto comes from. Always be writing. Let's see here. Would to roll back a cover call, let it expire, and take the cash? Mark C's asking, would it be better to roll a cover call or let it expire and take the cash? It depends on you. I like to roll them a couple of days before they expire. Sometimes I actually will wait till the day of expiry because that's less data, right? That you have, and so the margins get smaller, and so I just like to burn all that intrinsic and extrinsic value, and so that way I can roll a week or a month for as little money as possible out of my pocket, and then just bring in more premium. So the answer is yes, right? I'm a numbers person, but I'm also I'm a money person. I hate to pay money to roll. I like to be paid to roll. So whether I roll 3 weeks out or 3 months out, I'm never gonna take money out of my pocket. I know there's some people that are okay taking $100 and rolling for the stock to be worth $200 more, and they see it as a win, and it is. But I personally would like to. I would go 6 months down and then take 250 dollars per contract. Even if I go further out in time, because I don't care. Time is my ally, right? And then I'll roll for like one strike zone up or two strike zones up and bring in premium. So to me, it's a win-win. Uh, Yo, Beach Boy, what's up, man? How you doing? Yeah, brother. I decided to make another video because I want to get us ready for the coming up week. So let's see here. Who's in here? We have not a lurker. What up, Nala? Hey, buddy. No wrench for you, man. No wrench for you, my man. Um, yes, I'm holding 5 years out. No wrench for you. Uh, the Girl Scouts are 80 there. I don't know what that means. Time to fill our pockets yet? A few hours from now, Poto. A few hours from now. Nala's always misbehaving, Beach Boy. Let's see here. Watching with only 6 thumbs. What's up with that? I don't know, man. Get your thumbs up, people. Come on now. 9% of the time, cash should be keep pricing. Not late, yeah, man. What up, Alex? Yeah, you know what, man? I always try to take credit on a roll too, man. I just that's just the way that I roll. Pun intended. But it's just I like to be paid to roll, right? If I'm gonna take my time, my sweet time, and I'm gonna take one for the team, so to speak, I'm gonna go and I'm gonna take more premium, and I'm gonna take a higher strike zone, as well as I'm gonna take money off the table. It's a win-win, So that's why I hate paying to roll because I see it as like I like having alligator arms, right? You guys know those little alligator arms. When it comes to time to pay, I like to go like this to grab my wallet as hard as I can so I don't have to like grow my arms and take money out of my pocket so that I can roll. That's just I don't like that. I never like doing that. But but yeah, so that's my philosophy on rolling and why I try to take as much money as possible off the table on rolls, and I don't like paying. And so anyhow, Unity. So like I was saying, Unity, it's going up to 30, man. It's going to 30. I know that Beach Boy actually was selling cash secure puts on Unity when it was 15. I was pounding the table and I was saying, please sell some cash secure puts. Buy the stock where it's at, because it's gonna fly, and it's probably twice as much as it was then now, if not more. And so people that sold cash secure puts in 15, 16, 17, $20 zone, right now those have shrunk like 40, 50, 60%. And you're taking money off the table. At this point, I would look to take money off the table, so that you can roll those cash secure puts and make what I call everybody calls a lateral move. So take that money that you had on the cash secure put for Unity, because say you sold Unity cash secure puts 20s, 18s, 16s a few months back, right? And they were for 2027 or 2026. Well, those cash secure puts in a couple of months have already made you 40, 50%. So in a couple of months, those have already shrunk. Anything can happen, right? Unity could go to 35 or 40. But we don't know that. We don't know that. We don't know anything. We do know that Unity is trading at almost $30 right now. That's all we know. So if you can take money off the table, which I have taken money off the table, I just wrote new cash secure puts. I wrote 25s for 2027, and then I took big premium, right? So you always move with the cash secure puts. That's another thing. I like following the stock and moving up and down with it. That's just the way that I like to invest. But if you already have made 40, 50% back on your cash secure puts on Unity or any other stock, for that matter. And now you're going to have to wait, 20 months for the other 40 or 50%. I just don't see the point. Take that money now off the table, right? Again, this is just information. This is what I would do. I'm not giving anyone financial advice here. I'm just saying you can take that premium now, right? Or that money that you have in the cash secure puts. And then you can look at other companies, man. You have companies like RXRX there that are just prime to take a snap shot completely, and spike up. You have Arch, you have other companies like PagerDuty. You have. I mean, there's I don't know what companies you guys specifically are looking at, but Nvidia has also been kind of scaling down some. So I'm licking my chops for it to hit the 130s. If Nvidia goes to 130s, or even 125s, I'm gonna go at market price and probably get 100 shares, or I may do a cash secure put for 125, and then just go 3 weeks out and try to get a sign. And then bring in some sweet premium because those premiums are juicy right now. And if you guys know me, I'm all about a juicy premium, right? If I can bring in 10% of whatever my cash secure put total is, if I can bring in 10% of that in 3 weeks, that's a win for me because I'm basically buying a stock that I really want where it's at, which means sometimes for the most part, this is like 52-week lows or close to it. And imagine getting 10% off on that, right? I basically look at it like this. Like, let's say, for example, there's a company you guys like, right? Like Louis Vuitton, Gucci, Prada, Armani. And let's say they were to have a 50% off sale, right? 60 or 40%, 30% off sale on a specific day for no reason at all. People would go nuts and say, holy shit, they're having a great sale. Let me go get some of those items, right? It's the same way with stocks, and that's the way that I see it. For whatever reason, somebody decides to dump, 1 million shares or 1.5 million shares, and the stock, takes a dump. The fundamentals are the same. There's no changes in the CEO, on the CFO, COO. Everything is the same. Nothing has happened, but the stock just tanks. That's just basically someone taking money off the table. That's basically BlackRock, trying to take money off the table so that they can then switch that money elsewhere. Somebody got margin called. There's so many different reasons on why these big outfits take money out of the table or off the table, right? And we don't know them because that's not who we're not in that atmosphere, right? But what I do know is that whenever a company goes on sale, I like to go and I like to take advantage of that, and I sell cash secure puts, right? Another stock that we're looking at right now is SoFi. Man, SoFi is. I love SoFi. Been trading SoFi for 3 years, and it was one of those where it was the stock that was playing the smallest violin forever, right? And everyone was so angry with SoFi because it would never move, or it would move up, you know, a couple of dollars or $1, and then it would come back down, and then people would get so frustrated uh, because there goes SoFi again doing SoFi things. And oh my God, I wrote thousands of covered calls, and I took a lot of premium. And then people would just say, when should we write on SoFi? When should we write on SoFi? And I've been writing on SoFi for years. It's now taken off, right? And I don't know. I think it's going to take a little of a hit. I think stock loss harvesting is going to happen, and I think that people are going to sell. I see it going to 13. I don't see it going below 13. Anything can happen, of course, but if it goes to 13, I'm going to look at selling some $13 cash secure puts for like January, and then taking in some premium, and then start. I'm going to start averaging up My average is below 8 right now on all of my accounts with SoFi. I think some is actually on the 6, averaging 6. And I've already written cover calls. I got some $12 cover calls for 2026, and I have some $15 cover calls that I sold for 2027. I've taken a big chunk of premium already, and I took that money and I bought more RX. I've sold some cash secure puts. I've bought I bought more open door technologies. I bought more Redfin. Redfin is a good one. It's another one I'm going to put in the Savage 10, which is going to turn into the Savage 20. Um, Redfin, I've been trading now for a few months, and it's a gold mine too, man. Whenever it dips below $9, I'll sell $8 cash secure puts, and I bring in a lot of premium, and I pray to get a sign. If it goes up to 10, I sell $9 cash secure puts, and I pray to get a sign, because if you guys know anything about how cyclical, the economy works in the United States, um, real estate has been taking a beating, and yes, house prices have not come down as much as people expected them to, and also a lot of people, because of the rates being so high, kind of held on buying a new home, right? Because they expected the rates to go back down to like 3%, and that's not going to happen again, guys. I'm sorry to say. We may see 5 again, but next Redfin has so much property that they own, and they're going to start dumping it and selling at a massive profit. And it's a stock that I think it hit $4 or $5 at a point, and I went fucking ham. And I have a lot of shares now, and I love writing $12 cover calls and $11 cover calls, and I'm just taking that premium right now. RXRX, it's another company that I'm just very bullish on. It's pharmaceuticals and AI combined. Think, Genome Project, right? If you're anywhere in the Bay Area like I am, you know how serious these companies are when it comes to AI and the pharmaceuticals. Now you put those together, and you'll have a monster. I see RXRX expanding and being $100 in the next 5 years. Um, it's like $7 right now. It was like $4 at a point, and that's when you want to get in. People are always asking me, when is the best time to get into the market? When is the best time to get into the market? And honestly, man, it's during the when everyone is scared, when everyone is in the media saying that um, the markets are crashing and everything is on is gonna everything is being affected negatively, and it's just it's that's the time to get into the market when everyone else is running for the hills and scared. That's when you take your money out of the bank, right? And you say fuck it, right? And you start buying into companies that you've researched and that you know are going to make money in the future. um, you got to be high when it comes to your convictions, right? You have to know that you have to trust yourself, right? And that's one thing when it comes to me. I know that I do hundreds of hours of research into every company that I own, because it's my hard-earned money, and I'm very conservative when it comes to spending my hard-earned money. And I do as much research as possible so that I can get into an investing um, perspective, right? I can get into the investing mode on these companies, and I try to buy them as cheaply as possible. You look at the 52-week lows, you look at the 2-year lows. You look at, where it's going, what they're working on. I mean, you look at their balance sheet. You look at who's running them, right? You look at CEOs, CFOs, COOs. Um, you look at their R&D, right? You look at what they have in the pipeline. You look at what they're going to do, what they're saying they're going to do, and then you look at where their executives have been. That's another thing people don't research is where have these executives been. Like I would never invest in a company that's ran by someone that used to be an executive at Enron, right? I wouldn't do that. Um, that's basically what I'm trying to say. And so anyhow, moving on, SoFi, like I said, I like it. Time to take some money off the table, right? Write your covered calls, man. Write 15s, write 20s. If you're really scared, that you may run some more, why don't you write some 20s for 2026 and take, some good premium off the table? Because right now, there's actually good premium on the 20s for January 2026. So, if you bought the stock at $6, $7, $8 and you sell it at $20, you made 150% of your investment. What is wrong with that? And then you're taking premium, which you can use at that moment that premium becomes available. You can use it to buy something else. There's another SoFi out there. You just gotta research, right? You just have to look at the option chains. You have to look at companies. What companies are working on. Set yourself up for the future, right? You could go and you could buy some Amazon shares, buy some Nvidia shares and start a position there, right? Get a couple of shares here and there and start, taking a position with them, and then try to have 100 by the end of the year. That's a goal, And I'm one of those people that likes to have goals, but I start with small, tiny goals. Everyone's always like, I want to have a million, 2 million, $10 million. It's like, of course, we all want to have $10 million, right? But how the fuck are you gonna get there? You have to do the work. You know, um, my daughter plays soccer. She plays. She's actually very good, and she was really heartbroken when she broke her arm before the championships, and it was just heartbroken, right? And I talked to her and I said, I know you're really heartbroken, and I know that this is not what you were, looking forward to. But um, what if your team won the championship, right? You would be happy, yes, and you would be part of the team, yes. Um, well, how would you feel if they won the championship and then the championship trophy, you comes your way? Are you gonna? I mean, are you really gonna enjoy it? Are you really gonna um, appreciate it? And she said, yeah, I think so. And I was like, are you sure? you know, um, wouldn't it be so much better if you were to have played that game and you were extremely tired, and then that trophy came your way, and then you held it up, and you really probably would cry because you've had so many, challenges during the year, and now the trophy, you were a part of the team that won it. You weren't just on the sidelines. And then something clicked in her, and she said, I really wouldn't like it, Daddy. I'd rather play. And I was like, well, there you go. That's, you got to do the hard work. And yes, it's great um, to receive, a prize that's given to you, right? But when you don't work for it, like, is it really like enjoyable? Like, I want to grind, man. I'm personally one of those people that likes to grind. I've started from nothing. I come from a very disadvantaged background, a single mother household where we all lived in one little, small bedroom apartment in San Francisco, in a really bad area, and we just worked our butts off. We studied hard. There was a lot of times when I could have gone to parties and my friends were going to parties, and I said, "Nah, man, I have to study for a test." I just we went to the wrestling invitational, and I took Saturday to win that tournament, and now I have to kind of hunker down and finish this, or else I'm not going to be able to get a good grade on this one assignment, and I have to do it, and it's like it sucked, right? But everybody else was having fun and I was studying. But you know what? It paid off, man, because I was able to get into a good college. My brother and sister saw this and they were able to get into good universities. And now my brother's an MBA, my sister is doing very well, and I feel like I'm doing well. So um, I feel like it's meant a lot more to me to be where I am now because I had to grind, right? And so I feel that the same thing has to happen with investing. If you just knew about a stock that's gonna rip and you're gonna make $1 million right away, it's cool, but you won't appreciate it as much as if you just take the time to do the heavy lifting, right? And to do the due diligence and to grind it out, and to start making those little goals, right? Say, I'm going to start with one covered call. First, you got to get to 100 shares, right, of NVIDIA. And then, once you have 100 shares, you do one covered call. And eventually, you'll use that one covered call premium to buy more shares so that you can do two and then three and then four covered calls, on NVIDIA. And that's kind of the way that I see it, right? Start a position in NVIDIA, start with one share. Start with one share, and then eventually you'll have 100. You'll do a covered call. You can do a cash secure put, whatever, and it's all up to you. What do we have here? When everyone's peak scared. Yep, do the face. You're right. That's when everyone is scared. It's when I get greedy, and I usually take out a loan against my credit because I hate to take money out from cash secure puts that still are like at 5%, 6%. I like them to be around 40 or 50 to take money off the table, but I totally like paying $300, $400 to get, $10,000, $20,000, and then I use that because it's a loan. It's not going to be taxed. The way I see it, I'm paying the tax, right up front, and then I use that money to buy, stock that's extremely cheap or sell some cash secure puts, and then a month later, I'll sell another cash secure put, and I start using that premium to pay off the loan. So essentially, it's kind of like, it's a hack, and it works for me. I like it. Let's see here. If it's not easy to watch over too many options, positions as many companies, so I limit at least. It's a different strategy, like cash grab. It's not the same. A cash grab is not the same as a cash secure put and cover calls further out the money. Beach Boy. Yeah, the way I look at a cash grab is, let's say, for example, my wife. She's finishing her MBA right now, and we have to pay, I think, the last 2 semesters, and then she gave me, a couple of dollars, right? And she's like, "Hey, we need to pay off the tuition," and I just said, "Well, we still have a couple of months. Let me see this money, and let's put it to work." I put it on cash secure puts, and I've been taking 30, 20, 30. I've been doing weeklies. And right now I have, 60% of the money that she gave me. Sorry, I made 60% on the initial capital that she gave me. So instead of just taking the money and paying out of pocket, we're probably going to be, scot-free on this one. And I still have another month or a couple of weeks to make a couple of $1,000. So, it's just a hack. I just we're probably going to end up paying, just a few $1,000s instead of like, $20,000 that she initially was going to pay. So that's that's the great thing about cash secure puts. And if it would have been one of those where it goes, against me, I can always take money from another cash secure put, right? That's kind of marinating. Like I have some Teslas that are some 190s and some 180s that are for 2027. And I think I wrote them in January. I'm sorry, I think April and May, and maybe June. So like I've staggered them, right? And I can always go with those because those are already, at 50% or more. And I'm just honestly, those are on the ETF that's generating 5% back every year on Charles Schwab. So I'm not trying to touch that until I have to. So, but right now everything else is working out for me on the other end. So I like the approach that I'm taking, and that's kind of the way that I see a cash grab is. I take a big chunk of money. Um, I sell cash secure puts for like 2027, right? And I just, I do it on a stock that, it's like Nvidia, some Tesla on a extremely red week. And then it's a cash grab, right? Because I know that there's no way that stock is even going to be close to where my strike zone is. When it matures, right? And so like it's just that's I'm grabbing all that cash right now to do whatever I want with, so that's kind of how I see a cash grab. Um, Premium of the option. If you like Nvidia, check out NVDL. All right, let me see. NVDL. Let's do that. Mr. Premium of the option is one of the few people in the investment world um, that I actually listen to because the guy actually knows his shit, man. So Granite shares uh, 2x long Nvidia daily ETF. Oh, it's a daily, huh? All right. I'm gonna look it up. Thank you, brother. I appreciate it. Appreciate it very much. Let's see here. C3.ai. Let's go on C3.ai. That's another one of my Savage 10 picks. Again, when I made a video before yesterday, I think in C3.ai was like $20, $21. It's $40.51 right now, right? You can judge me all you want, guys, but you can't judge me and BS and say that I don't know what I'm talking about because it's right here, right? This is the proof that you need. We can always look at the tape, go back and look at the companies that I've endorsed, and they're doing great. I think aside from a couple, I think I've endorsed 20 companies or 15 to 20, and I'd say 90% of them have panned out. So any investor in the world of Wall Street that has a 90% success rate um, is the real deal, right? I think any investor that's at Charles Schwab, any investor that's at Bank of America, Wells Fargo, that has a 90% success rate, I think we can think in terms of them, having 5 stars, right? So I'm not trying to say that I'm a 5-star, analyst at all. But what I'm saying is like the companies that I have endorsed in the last few years are doing very well, and that just goes back to the research that I've done on them. Right, every single company I'm looking at and that I endorse, I've done over $100 hours of research on. So it's C3.ai is one of my babies. I started looking at it like 3 years ago when they took a contract away from Palantir uh, because they were kind of both competing for the same contract with the same company, and I followed that. And I saw that C3.ai actually beat out Palantir. And I started looking at them in depth, and I was like, holy shit, these guys are the real deal. And I think the stock was around $25 then. And then it went down to like $10. And I went ham. I took out a loan so that I can buy more shares. And I've been writing cover calls on AI for years. And the premiums are beautiful, especially when it runs. When C3.ai runs to like the 30 area, 35, $40 area, you can really get a lot of money. Right now it's 40.51. I would look at, June, maybe May. If you really want a cash grab and you want a lot of premium right now, they are having earnings tomorrow. So the volatility is extremely high. I would say you can definitely sell some 45 or even $50 covered calls for 2026 January and make a shitload of money. Worst case scenario, you sell at $50 a share, and so that's up 20% from where it's at right now, right? That's a lot, and so It's 40.51 right now. You sell at 50, and you bring in $1,000 in premium. What is wrong with that? That $1,000 you could divert and buy, I don't know, 7 shares of Nvidia, right? You could buy, 2 shares of Tesla, or 3 shares of Tesla. I don't know, man. This is just ideas. It's something I would do. I would buy some Amazon, because those companies that I go and I invest in when I take premiums out are companies that I'm going to hold for, like, 5 to 10 years. Any company I invest in is 5 to 10 years, but I take stock that costs me, between, I don't know, $4 to $10, and I run with it until it's like in the teens or 20s, 30s, and then I take money out, and then I buy stock that is over $100. That's another strategy that I have, but it's like I don't think I really talk about that because it's just my thing. And I'm not saying everyone should do that, but it's just something I do, because it just makes sense to me. And then that stock that's over $100 is usually stock that I'm not selling, um, and I'm extremely conservative, with that type of stock. And I don't sell cash secure puts as much on that stock as I do the other stocks. But what I do is I sell covered calls. So let's say C3.ai, I buy some Nvidia, right? And Nvidia's at, like, wherever it's at right now. I will wait until Nvidia's $200. I wait until Nvidia's $200, and then I'll sell 250s for, like, 3 months out. So again, always making money and moving the ball ahead, right? Moving the goalpost as well, and just always making money, always writing, right? Always be writing. And if it tanks, then I sell cash secure puts. Not a big deal. What's up, Hockey Rink? What's up, Nala? I was here earlier. In rest mode currently. Dow Jones opens up 600. Down 600? Well, let's see what happens, man. If it opens up down, I welcome that. I would love it if the Dow opens up $600, 600 points less than where it's at right now, because that means that I'm gonna start looking at cash secure puts. Where is the sell off gonna happen? You start looking at the where the sections, right, of the market are, and what's selling off, and who is buying and who is selling off. Look at the volume, right? Look for divergencies, right? So let's say a stock is not following, the volume is not following stock, meaning that you have a specific average when it comes to the daily volume for a stock, and then let's say that the volume is half of what it usually trades at, right? But yet the stock is going down. That's a divergence, because then the stock is not following, or I mean the volume is not following the stock. So same thing when the stock goes up, like half of what it usually averages at, and it goes up $3, $4, right? And you're like, it's up 10%, but it's on low volume. It's divergence, right? So you have to be careful, and that's where I write cover calls. That's exactly when you write cover calls, because there's gonna be a rug pull. It's just you have to know these things and learn them, and it takes time. But that's fine. That's why we have the channel, right? And that's where you could ask questions. Beach is on timeout. Oh shit. Beach, they time out, man. I don't know. Syria changing. All will be selling. It was Mo. I don't know. I think that the I think the tax loss harvesting, it's already happening. It's been happening since, like, mid November. It never happens all at once. It seldomly does, right? And it's sections. Like, banks will dump. I mean, this is all the good old boy network, man. I mean, this is all. It's just all it is. They know each other. They call each other. You think the CEO of BlackRock doesn't have dinner with Jamie Dimon, bro? You think that Elon Musk doesn't call up Jeff Bezos to talk to him? I mean, these guys, it's a small club, and they all know each other. You and I are not welcome there, because who are we? But these guys, they know each other, they talk to each other, man. And although they're not gonna say it, you're right, they can't say it. Um, I just don't see a sell off happening, like industry wide, because then they will all suffer. So that's I see pockets, right? Like I said, banks or like some tech companies will sell. You know, I know that Tesla hit a few road bumps a couple of weeks ago. That was just Elon Musk, that had been selling off because he wanted to take some money. So it's just the way that it is, man. Those people, whenever they dump, 500,000 shares and the stock just craters. There's nothing wrong with the fundamentals. The company's still the same. It's just that rich people got to pay taxes too, and they're going to be paying a lot less taxes in the next few years. I'll tell you that. They're actually going to be getting tax breaks, so it is what it is. You can only play the game, and that's why we're here, right? So that we can play the same game and learn, their shenanigans and try to capitalize on what we're doing, right? So yeah, C3.ai. I don't know what's going to happen, right? I do know that sometimes C3 has some really good numbers, and they have a really good quarter, and then the stock goes down. And then there's sometimes when they have not such a great quarter, and the stock just goes up. It just depends, right? I think AI is the next frontier. Everybody knows it, and at this point, it's hard to tell what's going to happen tomorrow. But one thing I do know is the stock is 40.51 right now. It's $40.51, and you can definitely make a case for it going down to 30 again, right? If it goes to 30 again, I don't see why you wouldn't sell some 27.50 cash secure puts for like May and bring in some nice cash. Again, on the other end of the spectrum, I don't see why you wouldn't sell some $50 covered calls for January 2026 and bring in $8, $9, $10. Like it's just you're sitting on a gold mine at this point because it's so volatile, right? Now, can the stock go to $100? It can, but it can also go back to 20. It just depends on what happens, right? We don't know industry wide what's going to happen. We don't know, if Trump is going to say something stupid, right? We don't know how the economy is going to be affected with these tariffs. We don't know what the contagion is going to be, right? We don't know if people are going to take money out of AI and put it into like agriculture. I don't know, man. We don't know. We do know for a fact that C3.ai is $40, and then you can capitalize on that right now, right? And based on what happens tomorrow, gotta have a plan, right? Have a plan for it to if it goes and flies, right? Have a plan. If it tanks, have a plan. If you have plan A, B, C, you're not gonna be caught, kind of your back heels and receive a gut punch. You're gonna be fine. So and that's what you have to do. You have to be able to adjust. You gotta keep nimble, right? And then make a plan so that you can capitalize on that and make money. That's why we're here. All right. So Palantir. Oh man, Palantir is a beautiful one, isn't it? Isn't it? I was telling you guys to buy it at 20. I was like, anything under 20 was a God gift. And I was telling people, I was pounding the table. I was like, Palantir is no joke. I told you guys, Palantir is going to be Skynet, man. I don't know if you guys watched The Terminator, but Palantir's a Skynet, man. So it's just a matter of time. I just want to make money with it. And so my average is $8, $9. I sold some 40s that are like underwater for 2026. It's time to sell some 80s. So I don't know why we support Skynet, man. I just obviously it's not Skynet, right? But it's just making money. I mean, it's there, right? So if you don't make money, somebody else will. I just, I'd rather it be me so that I can myself some cave, up in like, Guangzhou province in China. So when the machines come and fuck everybody up, I'm in a cave somewhere and I'm chilling, grilling, pork ribs and having some rice, and some paddy fields, in the fucking off the grid somewhere. So it's like, make that money there right now so that you can escape later. You're gonna need money, right? So like you might as well make it um by putting your money to Skynet and then not. Somebody else would. So yeah, man. So Palantir. Um you can sell some $80 covered calls, for January. You sell some 90s, and bring in some nice premium. You can sell some it's run a lot in the last month, right? There has to be a rug pull. I mean, it's just conventional wisdom would tell you that that there's going to be a rug pull, and so I'm thinking it goes back to 65, and you can sell some $60 cash secure puts, and bring in some nice dough. Get assigned and then sell cover calls. Keep moving with the stock up or down, right? That's what we do. So it's all up to you. It's all up to what you want to do and if you want to use money or not. Are you allergic to money? You have to make that decision yourself. You can definitely do nothing and wait for the stock to go to $150. You very well could do that. It may take a year, may 2 years, right? But it'll get there. Now the question is, what's it to you? Are you being compensated for taking the risk? And what if, let's say, Palantir shits the bed and something happens and it goes to $10, $20 again? How are you gonna feel, right? So if you were to sell some covered calls, it would feel a lot less painful, right? And so take in that premium right now. And if you get taken out, then you still would make more money because you're selling for more than what you bought it for, right? And that's the name of the game. So I say, Palantir, sell some 80s, 85, some 90s, and if we have like a red week where it goes back to 65, 60, sell some $60 cash secure puts, sell some 55s, right? It's what we do. It's what I do. And so UiPath was like $9 or $10, not too long ago. It is now 1481. Really good company. I like it. I see it going to 20, and I say selling some $13 or $12.50 cash secure puts for January. Beautiful. Or if you bought it at 12, 11, and you want to sell some $15 or $17, covered calls for January, beautiful. Basically, have the stock pay you rent, man. If it's gonna be in your portfolio, and it's gotta pay rent. I see my stocks as tenants. Any tenant that's gonna be in my portfolio, which is my building, has to pay rent. And if they don't make money in a couple of months and they start costing me too much, time to get evicted. Time to get evicted, I'll go into the next stock. And that's how we keep making money, right? Take money off the table when you can. Sell cash, secure puts when it's possible, and sell covered calls when you have runs. And that's just the name of the game. It's not rocket science. It's really not. So, anyways, that's what we got, for this coming up Monday. I am very excited to see, how things are going to happen, and what we may have in store for us this coming week. I think maybe some tax loss harvesting is going to start or keep happening, right? I don't know the sections. We don't know how this issue with Syria is going to affect us. We don't know what's going on with Israel, right? We don't know how these U.S. steel companies not being able to merge Japanese companies are going to affect us. We don't know how the tariffs, on lumber. We don't know how the tariffs on groceries and produce coming from Mexico are going to affect us. Um, we know what we know, right? And so we just gotta keep doing what we do, and then making a profit, because at the end of the day, that's what matters. I'd appreciate it if you guys give me a thumbs up, right? And whenever possible, you can play my videos. I'd appreciate that in the background. You don't have to watch them if you have a laptop at home or a TV, right? Just put me in the background and then just go about your day. I'm trying to meet a certain threshold, right, so that I can get more people out there, right, into the know on how we do cover calls and cash secure puts and how to make money, man. I'm pretty much trying to have the channel that I wish was here for me when I started investing. And hopefully I will be able to reach a couple of people out there that have no idea how the stock market works, that have no idea on how to start a portfolio, an account, and so that they can start learning what a cover call is, what a cash secure put is, and how to start making money, man, and setting themselves up for the future. That's basically the bottom line. And so I'm just hopefully trying to get to as many years as possible, because I think that these next 4 years are going to be extremely volatile, and it's going to be just prime and ripe for option riders, right? And so I think a lot of people are going to need a lot of help, and if I can, help a couple of people out there make their lives easier by figuring out the stock market and how to invest, I think that's kind of cool. Anyways, have a great rest of the weekend. And I guess tomorrow is going to be a Monday. I can't wait for the bell to ring so that we can start trading. And I'm very much looking forward to see how the markets are affected by everything else out there, micros and macros. And I'm definitely excited to see how the Savage 10 are doing. Another 10 stocks are coming in the future, so I can have a Savage 20. I more than welcome to comment, and leave me some comments on what you guys may think as far as the what companies to look at. I'm always open ears for new companies that I may not know of, right? So that I can do my research and see if they're worth dipping our toes in and then starting a position on. Let's see what we got here. Maybe if we support Skynet early, they'll keep us around at the end. Yeah, exactly. I gotta go. Peace out. Peace out, Nala. I appreciate you being here, brother. Top call option for tomorrow. Top call option? Man, I don't have one. I mean, that's just I basically went down the line on my Savage 10, and I kind of gave you, kind of what I would think would be something that you're looking at. So, like, I guess it would be top 10 right there. I just said it. There's not like one specific company, man. There's just so many companies out there. It's up to you. Look at the option chain and what. I don't know what your situation is. I don't know what your investment strategy is going to be or is. What your goals are. Everyone is different. My needs and then my strategies are different than yours, because I'm in a position in life where I have to account for 3 kids and a wife, and we have to pay insurance, and we have to. I mean, there's a lot going on, right? So it's like my investment strategy is gonna be very different than yours, because if you're like a single person, that's working out, in the tech field, or you're a girlfriend, or you're just married and you only have 1 kid. That's very different than someone that's been married for 10 years, 20 years, and then has a house. If you're in an apartment or you own a house, again, things change, right? I don't know what your what your sense of like let's say the stock that you're looking at takes a tank, it tanks, right? It takes a complete shit. I mean, are you gonna run away and sell and cut your losses? Are you on it for the long haul, right? Are you looking at like the banking industry? Are you looking at a more rounded approach? Are you looking? I don't know. It's just hard to say. As far as my stocks in the top call option for tomorrow, I went through it already. I looked at Tesla. I looked at SoFi. I looked at Unity, AI. I looked at Palantir, right? So you just have to go and watch the video and kind of look at the strikes. Anyways, thank you for watching. I really appreciate you guys, man. I hope you guys have a great rest of the day. Have my videos play in the background. Give me a thumbs up. Make comments, man. If you guys have any questions, let me know. Hopefully next week I'll be able to come on live again. I'm looking to start, dropping more videos more regularly so that, I can get, some more traction and get in the ether, out there and hopefully reach a lot more ears. And we'll go from there. I'm hopefully I can help thousands of people at some point make a few extra dollars. And that's kind of like my way of giving back. Thank you, knuckleheads. I appreciate it. I'm the Savage of Wall Street, baby. Remember, credit is power. And so cash is king. That's for sure. But credit is power, and let's make some cash so that we can then have cash being the king and have a better credit. So credit is power, baby. All right, you guys have the rest of the day. Bye.